Ladies and gentlemen, good day and welcome to the Q4 FY25 earnings conference call of Apcotex Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Nupur Jainkunia from Valorum Advisors. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone, and a warm welcome to you all. My name is Nupur Jainkunia from Valorum Advisors. We represent the investor relations of Apcotex Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter and the financial year 2025. Before we begin, a quick cautionary statement. Some of the statements made in today's conference call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call and hand it over to the management for their opening remarks. We have with us Mr. Abhiraj Choksey, Vice Chairman and Managing Director, and Mr. Sachin Karwa, Chief Financial Officer of the company. Without any further delay, I request Mr. Sachin Karwa to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Nupur. Good afternoon, everyone. It is a pleasure to welcome you all to the earnings conference call for the fourth quarter of financial year 2025. I hope you had an opportunity to review the financial statements and earning presentation, which have been circulated and uploaded on the website and the stock exchanges. Let me provide you with a brief overview of the financial performance for the fourth quarter and financial year 31st March 2025. The operating income for Q4 stood at Rs 349 crore, reflecting a year-on-year growth of 12.5%. This performance was supported by highest ever quarterly volume and export volume, which grew by 15 and 22% respectively on year-on-year basis. EBITDA came at Rs 39 crore, marking a robust 23% growth, primarily driven by higher volumes and improved capacity utilization. Consequently, the EBITDA margin improved to 11%, up from 10% in Q4 FY24, and significantly higher than 7.63% in Q3 FY25. Profit after tax stood at Rs 17 crore, an increase of 10% on year-on-year and a strong 44.8% growth on sequential basis. The PAT margin for quarter stood at 4.81%. This performance highlights a positive trend in profitability, supported by operational efficiencies and improved capacity utilization. Now coming to the financial performance for the year ended 31st March 2025. The revenue from operation increased by 24% on year-on-year basis to Rs 1,392 crore. The company achieved strong operational revenue growth. This growth was driven by a 16% rise in overall volume and a 24% increase in export volume, further supported by enhanced product mix and better price realization. EBITDA margin was at Rs 125 crore, which increased by 9.5% on year-on-year basis. EBITDA margin stood at 9%. The profit after tax stood at 54 crore with a PAT margin of 3.89%. Cash profit for the year has increased by 10.3 crore to Rs 95.6 crore. With this, I open the floor for question and answer session. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Dikshant Gupta from Geojit PMS. Please go ahead.
Yes, good afternoon. So my first question would be, can you provide a mix of the revenue from various segments like latex and rubber?
Overall for the year, I think, good afternoon, Mr. Gupta. Overall for the year, I think we are at about two-thirds, a little over two-thirds is the latex segment. Obviously, a large chunk of the growth over the last couple of years has come from the latex segment since the investments were there. So it's about two-thirds latex and one-third rubber, approximately.
Okay. And going forward, will you be focusing on expanding the latex segment more or the rubber segment more?
I think we're making a plan to expand both. In the rubber segment specifically for NBR, nitrile butadiene rubber. So as I've mentioned before that we are sort of waiting on the anti-dumping investigation final conclusions before taking a call and going ahead with it. So we're working that, so that project is ready, and we're quite hopeful that we would be able to expand there. And the latex segment, of course, we would be expanding.
And what is the capacity utilization and how much capacity are you planning to add every year?
So for last year in the NBR side, we were almost at 100%. I want to say about 95-96% capacity utilization, so close to 100%. And on the latex side, for the new nitrile latex project, which we are at about 75% plus now, I'm talking about monthly run rate. For the year as a whole, we were lower, of course, but Q4 we were at about 75-80%, between 75 and 80%. And so there, we probably have another year or two left, but their margins is an issue. And as far as the other latex business is concerned, which most of those latexes are manufactured in a Taloja plant, there we are at about 82% capacity utilization. So there again, in the next year and a half, we suspect we'll need more capacity.
Okay. And my next question would be, as the crude oil prices are falling, will it be beneficial to you and will it improve the margins further?
Historically, we have seen in the short term it's not so beneficial, because when prices fall so sharply, we are left with some inventory, both finished goods and raw material, and that's going to be the challenge really this quarter in Q1, because as you've seen that compared to March end to now, crude oil has really fallen around. I think it's our Brent crude is almost $60, a little over that, but around that, versus it was over $80 perhaps a couple of months ago. In the long term, of course, I think we all prefer lower oil prices. It does help.
Okay.
But we are more about the margins.
Okay. And my final question would be, are your sales, is your customer base diversified, or is it dependent on one or two customers?
No, not at all. We have a very diversified customer base. In fact, I don't think we have any one customer with more than 2-3% total sales.
Okay. Thank you so much and all the best.
Thank you. Participants, please restrict yourselves to 2 questions. If you have any more questions, kindly rejoin the queue. The next question comes from the line of Aditya Khetan from Smith's Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, with the lowering of crude prices, sir, earlier we have seen a trend that whenever crude prices goes down, we always book some inventory losses. In this quarter, sir, there has been some benefits on inventory despite crude oil prices declining. How should we look at this, sir?
Q4 was a little strange. Actually, the prices went up between December and February, and then came down sharply in March. So overall, you're right, there has been a slight benefit for the quarter, but the sharp decline was in March, March, April. So I don't know if that answers your question, but yeah, there was a slight benefit this time. Generally, we see, in a quarter there's a general sort of increase and then decrease, but we didn't have a clear trend this time. But we did benefit slightly.
Got it. Okay. And sir, this sequential dip in top line, I believe that our volumes from nitrile latex is improving. So ideally, the price reduction should have happened in the base business, which is why our top line has declined.
That's right, because volumes sequentially are up by, just 1 second, we'll give you the data, but volumes sequentially are, I think, up by 9%.
Okay, so the decline is largely dip in the realizations in the base business?
Yes, that's right.
Okay. So just one last question on to the nitrile latex. Earlier, sir, we had given a guidance that we would be touching around 600 crore of revenue. Is that guidance still intact?
Yeah, I think that 600 crores, from what I recall, was at 80,000 tons. At 50,000 tons, we would be closer to sort of 400, 450 crores. So what's the investment done so far? We have left a small investment for later, which we would only do if the margins improve. So right now, the nitrile latex business, we expect to be about somewhere between 400 and 450 crores, depending on the price of the latex.
And sir, and what would be the top line contribution in FY25 from the nitrile latex?
I'm sorry to interrupt, Aditya. Those were 2 questions. If you have any more, please fall back in the queue.
Maybe we can let him complete. But yes, I'd request, just to give everyone a chance. I'm sorry, Aditya, but just to give everyone a chance. However, since you started the question, why don't you complete it and we'll close that.
Sure, sir. Sir, I was asking on FY25, so what would be the contribution from the nitrile latex?
In terms of revenue?
Yes, sir.
It's about 14% or so. 14-15%.
Okay. Thank you.
Thank you.
The next question comes from the line of Rudraksh Raheja from iThought PMS. Please go ahead.
Yeah, thanks for the opportunity. My first question is, sir, could you help us understand what led to this major expansion in gross margins for Q4 of FY25? And can we assume that we have bottomed out and recovery should start from here onwards?
Yeah, there were a couple of reasons. One is overall we saw improvement in nitrile latex margins, which were very low. The second was in general in Q4 we did see slight improvement in margins across the board as well. And one of the reasons was there was some, in Jan and Feb prices went up and we were able to do some great buying. So there certainly has been some benefit to that as well. So a combination of 2-3 reasons, and the fourth reason is also volume going up. As volume goes up, margins overall go up as well, EBITDA margins. So that's, these are the 3-4 reasons. Obviously, there's been one big change, which is, compared to Q4 and Q1. So coming to your second part of your questions, whether that is bottomed out or not. So I think, look, that was our hope, but given these tariffs, the US tariffs and the uncertainty around that issue, what we are seeing in the market is a lot of uncertainty from some of our businesses that are more US focused. So for example, we are not directly, we don't have much exposure to the US, but indirectly some of our customers have exposure to the US. They export to the US. And so obviously they are affected in these uncertain times. Obviously the duties, except for China, the duties worldwide is now 10% into the US. But given the uncertainty, and that could change again in June, right, after 90 days, in July, after 90 days. So I think there is a lot of uncertainty. So there is, in Q1 at least, and Q2 perhaps, this US situation may create a lot of uncertainty in the world and for some of our customers. Directly so far, at least in Q1, we haven't seen our business affected too much, but the outlook is, the best word I can use is uncertain.
Got it, sir. And sir, on the capex front, if the current trajectory continues, we'll run out of capacity, as you have acknowledged as well. Can you share more details on the capex?
Yeah, we will run out of, so we expect that, again, as I said, we'll wait and watch. Of course, we are making multiple plans for further expansion of our current product range, which is NBR, styrene butadiene latexes, styrene acrylic latexes, and nitrile latex we will not be expanding immediately. We'll probably wait a year or two depending on how the margins play out. The plans are on, and we expect we'll be okay till perhaps middle of next financial year. So we should have enough capacity.
Got it, sir. I'll come back in the queue.
We will be sort of informing our investors about our capex plans once they are firmed up and approved by the board.
Understood.
Okay, thank you.
The next question comes from the line of Sani Vishay from Axis Securities. Please go ahead.
Yeah, thank you. Good afternoon, sir. So, coming on to the answer that you gave to the earlier participants, so margin improvement is driven by multiple factors. So, and besides volume, I think the most of the factors are external. So, are we saying that our margins will keep varying depending on external factors, or is there something that we are doing to improve the margins on a steady basis?
So one is, of course, we are growing volumes. That will obviously, as you said, expand margins. There are a few other plans as well to kind of reduce costs, which are ongoing. But however, yes, external factors, especially in the nitrile latex business, which has pulled down the margin overall for the year and for the quarter as well, although there's been an improvement in Q4, there is that external factor. There are external factors right now, and you know, over time the other external, I don't know if I'd call it an external factor, but you know, the whole industry added a lot of capacity just post-COVID. Now, in the last 2 years, there's not been any major capacity expansion in any of the latex businesses. So, when the capacity utilization sort of, goes to healthier levels, like we, for example, are 80-82% capacity. We generally find at 80-85% capacity utilization and above, things start improving in terms of margins. So, I don't know if you would call it an external factor, but that's more of an industry dynamic. And so, if you see our 4 years results, we had 2 years where our margins of EBITDA margins of 15-16%, and then the last 2 years where the EBITDA margins have been, obviously lower, maybe closer to 10%, 10-11%. So, so I would say that industry dynamics are also changing now going forward. The whole post-COVID boom, or during post-COVID boom, a lot of capacities were created, in Asia. So that kind of slowly is sort of petering out, right? That excess capacity.
Okay, so that's what I was trying to understand. So things have improved. I mean, it's not just that the crude prices filters or something like that, but I think we can expect relatively better margins going ahead compared to the dips that we had.
Sorry, I didn't understand. I'm sorry. It's not very clear.
Okay, so I was trying to say that that's what I was trying to understand, that it's just not just the crude prices, but I think in general the things have improved, and we can be hopeful of more stable margin levels going ahead, right?
Absolutely, and honestly, the crude prices for us, unlike maybe FMCG companies that are using crude as a base, or FMCG is the wrong word, but any company where I don't think let me put it this way. I don't think crude prices in the long term affect us too much, whether they're up or down. We obviously prefer them lower than higher. But in general, it's about the margin between our raw material prices and the finished goods prices. So being a B2B company, we have to move quickly and reduce and increase prices as the raw material prices go up and down. So it's really the delta that we focus on.
And lastly, if possible, could you share now or later the average realizations for the whole year?
What do you mean by what?
Realization per kg for the latex.
Was Mr. Vishay.
Okay, fair enough. Thank you.
Thank you. The next question comes from the line of Jasdeep Balia from Clockwise Capital. Please go ahead.
So thanks for taking my question. Sir, can you just give us a general performance update on various segments of the business for FY25? Specifically, if you could talk about volume and margin trends in the SP latex business, NBR, HSR, and nitrile latex, and any underlying trends which drove growth or margins in FY25 and your prognosis for next year in all the different segments.
Okay, so as I mentioned earlier, we had about two-thirds, let's say two-thirds is latex and one-third is the rubber segment. Out of it, I'll start with the easy one. The HSR segment, the margins are sort of steady. Volumes are actually, somewhat declined in the year compared to last year. So it's only about 5% of our total business now. It's not a growing business. In fact, it's a degrowing business. So we are sort of continuing with the business without investing any funds. So that's a little flavor on high-styrene rubber. In terms of nitrile rubber, we are at 100%, almost close to 100% capacity utilization for FY25, and we will be the same for FY26. No new capacity is going to be added. Margins, we are dependent a little bit on international prices, and of course now there's anti-dumping that we have filed. So there also margins in Q4 were better. Overall, they were steady for the year. On the latex side, where we've, as far as the paper, carpet, construction, for the year, it was definitely more challenging than the previous couple of years. Again, as I mentioned, capacity being added. On top of that, some of our exports were affected, especially in the carpet industry, to Turkey, to Egypt, because of all these, the war issues in Israel-Gaza issue. So because of all these issues, carpet was affected. However, overall for the year, we have seen, as you can see, we have still pushed through growth. Overall, we had a 16% growth in volumes, 24% growth in value terms, and for the year.
16% growth in volume is including nitrile latex as well, right?
Including nitrile latex, yes, absolutely, including nitrile latex.
So I'm talking about, so can you give us numbers only for the SP latex business? How is that business?
We don't give sort of for each segment, we don't give growth numbers. I'm just trying to give you a flavor without, unfortunately, I'm not able to give those numbers for sort of obvious reasons, because we have different competition for different latexes, and, we just don't want to talk about them individually.
Got it.
But overall, of course, SB latex also, I can talk about overall for the non-nitrile latex segment has also grown. We'll pull out the growth numbers in a second, but so I hope that gives you a little bit of a flavor. In terms of margins, as I said, it has been challenging for paper and carpet for sure, compared to the previous year. Construction has been steady. Overall, we've seen cash profit grow by about from 85 crores to about 96 crores. So what percentage is about 13-14%.
And so your prognosis for next year for SP latex business?
Oh, we're 12% growth in latex. Yeah, 12% growth in cash profit, and he's asking about non-nitrile latex, if you have that available. We don't really give a prognosis or a guidance for the following year, but yeah, for SB latex, we are quite bullish that we have a very strong market share. We are number one in that segment in India. We're growing well exports. So as long as the India growth story continues and we are able to continue to grow and export, there also we expect good growth. Obviously, it will not be like nitrile latex, because we are, in nitrile latex we just started a couple of years ago, but we expect good growth there as well.
Got it, sir.
So even in the non-nitrile latex segments, we have grown at about 8 to 10%.
Okay. Volumes.
Volumes, yeah.
Got it.
Probably a little bit more.
So in the nitrile latex business, you were of the view.
Sorry to interrupt, Jasdeep. You're done with your 2 questions. Could you please fall back in the queue if you have any more?
Sure. Okay.
Thank you. The next question comes from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yes, go ahead, Mr. Raman.
Sir, I just have 2 questions. One with respect to the guidance for the coming year. So what sort of volume growth are we expecting in terms of the latex and rubber segment? And secondly, are we expecting any further price margin improvement driven by the declining crude oil prices?
As a policy, we don't give guidance, but as I've mentioned in the rubber segment, we do not expect growth because we don't have capacity this year. So we will try and improve our margins in the rubber segment if possible. On the latex segment, of course, we expect growth. We have runway, so we will push. Again, we don't give specific guidance in terms of growth for specific segments or even as a company as a whole.
So, with respect to the rubber segment, so are we adding capacity in this year?
We will be deciding in the next 3 to 4 months, I suspect.
Okay. And sir, other thing is I want to understand. See, this quarter we had a bit the operating margin has improved from 8 to 11% on quarter basis, and you said it was because of better price realization. At the same time, you said the inventory which you have is of a higher crude or was basically when the crude price was higher. So when will the impact of lower crude price be impacting on the company level?
See, as I said again, I'm repeating that lower crude prices don't necessarily mean it's great for the company. Lower crude prices, once they're steady, if it remains steady, it does help, of course, from a working capital angle, customers, or from also from a pricing angle, it helps a little bit. But while they are falling, as we have seen in the last couple of months, it's actually a little bit not great for the company because we are forced to sort of reduce finished goods prices very quickly, and we may be stuck with some higher cost raw materials or finished goods. So of course, we try and manage it as best we can, but we are sometimes, what we've seen historically, we are sort of, sometimes a quarter or so can be affected with these kinds of sharp movements. As we have seen and not just crude, it's more than crude, it's the raw materials we specifically buy, which are petrochemicals, which are downstream crude. So even if crude goes down by 20%, does not necessarily mean that our raw materials will go down by 20%. In fact, some raw materials have gone down by 10-15%, some have gone down by 25-30%. So I hope that answers your question.
Yes, sir. Yes, sir. Only one last question. It's on the part of price realization. What is the realization per ton with respect to latex and rubber for FY25?
Again, we don't give sort of per kg numbers, as I told the previous caller as well.
Sorry. Thank you.
Thank you. The next question comes from the line of TK Pandya, an individual investor. Please go ahead.
Good afternoon. Thank you for taking my questions. First thing, I would like to know that Apcotex had acquired 26% of shares from Opero Vayu Narmada, and this company is a special purpose vehicle and has no business operations. What prompted you to take this line of going in for wind power generation? Because wind power generation production is very erratic and shutdowns are very frequent. You have a power purchase agreement. In your power purchase agreement, have you safeguarded yourself from any of these vagaries of wind energy production?
Yeah, thank you for your question. So this is specifically for the Gujarat plant, where Gujarat facility, where we are investing in a hybrid power project. It's not only wind, and whatever power is generated, we get a credit in the consumption of our Gujarat plant. So it's a Gujarat government scheme to promote renewable energy. And obviously the payback and the savings from this project is quite lucrative, and that's the reason. And more than that, and over and above that, more than the savings and the commercial aspect of it, we are also, from an ESG perspective, we will be sort of moving at least 60 to 70% of our current consumption, 65 to 70% of our current power consumption in our Gujarat plant to renewable energy, and therefore reducing our greenhouse gas emissions.
The cost of green energy, wind power or hybrid, whatever you are saying, as compared to the conventional cost of power from conventional sources, how much is the difference? How much profit or how much savings would you be able to make?
It's a significant difference, Mr. Pandya. It will result in reasonably good savings per year for the Valia plant. It's at least it's quite I mean, I don't have the exact numbers with me, but it's a significant saving.
Do you think your investment of 3.27 crores is worth it? You will not regret it.
Yes, definitely.
Okay. The second question is, your current liabilities and non-current liabilities, the total is about 184 crores. So, where have you utilized these borrowings?
So, the current liability, are on two fronts. The total borrowing one was used for the the projects that we invested in 2 years ago, where almost more than 200 crores were invested in 2 expansion projects, and the second is gone obviously to fund the working capital. And our total, as on March 31st, 25, the long-term liabilities would be, or not long-term, total borrowings would be about 185 crores.
That is what I said. But 185 crores is very high as compared to your profit is only around about about 50 crores or so, 51 crores. How much is it? What is it? 1 second.
Long term,
it's about 54 crores. Net profit is 54 crores. Your net profit. So it will take about more than 3 years to square off this borrowings.
See, some of it is term loan. So against that we have debtors as well. Some of it is working capital loan. So the working capital loan is probably more than half of this, and the term loan is probably a little less than half now. So we don't see it. In fact, on the contrary, I think our balance sheet is extremely healthy, and we also have cash in the books of about 100 crores that we have kept for future sort of opportunities or immediate opportunities. So I beg to differ, but I think our balance sheet is one of the healthiest that you would see.
Okay, no discussion on that. Last, our hope.
Sorry to interrupt, Mr. Pandya. You're done with your 2 questions.
One second, just 1 second, please. The margins at the end of the financial year, profit margins, earlier you had about between 10 and 15%. Now it has, in the last quarter, it was 4.8%. When do you expect your profit margins to come around 10%? Profit margins.
So as I mentioned that, in the last couple of years, there have been some internal challenges and some external challenges, which in the year FY22 and FY23, obviously we had better margins compared to the last couple of years. We expect that in the next year or two, things should turn around as capacity utilization goes up across the industry. I think things should turn around. Of course, there are certain uncertainties right now with the tariffs from the US. I think that's the main issue right now, and of course, the India-Pakistan situation, I don't want to comment because it's too recent and no one knows how that will play out. But for now, the tariffs is the big issue, and how it affects us and the customers and the economy as a whole. But overall, we obviously expect the margins to improve over time.
Okay, thank you so much. Thank you, sir.
Pandya.
The next question comes from the line of Rohit from iThought PMS. Please go ahead.
Good afternoon, sir. Am I audible?
Yeah. Go ahead, Rohit.
Yeah, okay. So most of the questions have been answered. Just two questions again. So, sir, I think historically we've been talking about so nitrile latex. When we envisioned this project, it was higher margins, and of course, the situations have changed post-COVID. However, I think in general, you've spoken about improving your overall margin band from let's say around the peak margins that I can see that you have done is around 14-15% during the good years of COVID. But I think you've talked about the normalized margins being around 14-15% going on from here, of course, save for these tough periods. So I just wanted to get your comments around that. How confident you are. I'm not saying this year, this quarter. I mean, I'm not talking about the immediate quarters. So I just wanted to understand from you, from if I look at the last probably 10 to 12 years of your historical numbers, the highest margin that you've done is during the COVID years. Now you've been saying that those will be your normalized margin, and probably you have if you get some good years, then probably it can go even higher. So maybe if you can just help us understand what gives you that confidence. I'm not talking about the current times. I understand these are tough times and there is overcapacity and we are all trying to get the way out of it. But if you can just maybe help us understand. So yeah, that's my first question.
Look, it's not fair to compare 10, 12 years because the company was very different 10, 12 years ago when we were probably a 400 crore company. Now we're a 1400 crore company. So and so one is we are achieving scale slowly but surely, right? We are going closer and closer to global scale. So, for example, our styrene butadiene latex and styrene acrylic latex plants are now the global scale, I would say. Obviously, what has happened is because of the COVID year boom, or post-COVID boom between 21 and 23, a lot of capacity was added. That typically doesn't happen, in this industry. It gets added slowly. I think the whole industry was running at full capacity very quickly in that 2022-2023 period. And so quickly a lot of capacity got added, which typically doesn't happen. So therefore, when that normalizes, we expect margins of those products to go back to normal. Nitrile latex, because it's used in medical gloves mostly, even more capacity than normal was added. I mean, more capacity was added in the last 2 years in nitrile latex than the previous 10, 15 years, So it's really been a very unusual period in terms of capacity addition. So as the capacity utilization normalizes, we expect the margins to normalize at about 14-15% now. Had it been 7-8 years ago, Apcotex may not have been able to achieve those margins because we were subscale. And therefore the confidence that we can do this. We would have to, of course, increase margins for NBR, for all our products as well, and introduce some higher sort of value-add products. So all that helps, overall. So I think even in let me put it this way, even in years that have been very challenging, we have achieved margins of about, for the last 2 years, close to around 10%, right?
Right.
And so this is when nitrile latex is pulling our margin down for the company as a whole. So without nitrile latex, we would have had, maybe 11-12% margins, 2% more. So around, let's say 12% margins, I'm told. And that's not such a great year. So once capacity, we should go back to 14-15%. That's what I feel.
Very clear, sir. Thank you. And sir, just one more question. So given you mentioned that we will probably run out of capacity probably sometime next year, this financial year, and you're deliberating on capacity expansion, and you said that that we are now in many products we are like a player of scale. So given that the margins are not great across the board, given the capacity increases and general realizations being down, would that not impair our margin recovery as a company? Just wanted to get your views.
Sorry, I didn't understand the question. Why would it impair margin recovery? Because of?
You putting more capacity, more supply coming in because you are player of a decent scale for all these products now, would it not impact, like in excess supply scenario, you're putting more supply is what my question was actually.
So what I'm saying is yes, but look, again, I'm just trying to mention what happened 2 years ago was we came in with a capacity and our competitors came in with capacity. So as a result of which a lot of capacity was added. Now we will, of course, now I think it will be sort of normal capacity expansions going forward. It will not be in the sort of post-COVID, capacity gold rush as we called it. And now it's going to be sort of more measured capacity increase for what we need, because if we don't increase capacity, that's also an issue, right? And obviously one eye is going to be a return on capital. So whatever additional capacity we do set up, we will want to utilize that capacity also in 2 to 3 years, and we would want to do it at a cost where our return on capital is quite healthy. As a company, we look at 20 to 25%. We target at least 25% return on capital. So as long as we are convinced that there is a high probability of that happening, we will invest.
Got it. And can I squeeze one more question if it's okay?
Sure, go ahead.
I think, sir, you mentioned in the last couple of calls about this tariff issue probably helping you, given there will be tariff on Chinese gloves exports, and given the current situation, there only largely the tariffs on China stand, and other tariffs are not at that rate. So how is the situation now evolving for you guys specifically and your customers essentially? Yeah.
Obviously, the difference between last time and this time is that last time it was specifically, last time when we went in January, it was specifically on Chinese gloves that the US had imposed 50% duty starting Jan 1st. Now, what's changed dramatically was since early April, is that tariffs were announced across the board and then, reverted back. And now, obviously, only China has more than 100. I don't even know the number anymore. It keeps changing, but more than 100% tariffs on all products, from what I understand. So, as a result of which, of course, the Chinese glove industry has been affected, and what we are seeing is that what we are hearing from our customers is that now China it's not viable for them to supply to the US, so they're coming to all Europe and Asia and other parts of they're seeing more Chinese gloves hit those markets. And similarly on the latex as well, because their overall glove, what I understand, glove industry has been affected in China. They have excess latex, so that's also coming out of China, and we are seeing it in some markets. It's a little early to say because all this started only in March, April, April rather, after April, and when the tariffs were increased even further. So far, no direct impact on us, but we have to wait and watch. For example, some of our customers who are in Sri Lanka, Indonesia, Malaysia, they are not sure what their duties will be when they export into America 2 months later, right? So there is a lot of uncertainty. People are basically holding off on building big inventories or sending big parcels to the US.
Got it. Thank you very much, and all the very best for this coming year.
Uncertain. Really don't know how it will play out. So far, I can tell you at least so far this quarter, which is almost half of the quarter is done, our volumes have not been affected. We are still pushing through, and it's all okay. Looking okay so far, but the outlook is uncertain. So it could change at a short notice, right, depending on what happens.
Sure. Thank you, sir. All the very best for this year.
Thank you.
Thank you. The next question comes from the line of Srushti Hansura, an individual investor. Please go ahead.
Hello. Sir, can you
go ahead, Srushti.
Yes, thank you, sir, for the opportunity. My first question is, any updates on ApcoBuild?
No, actually, it has been a little bit of a challenging year this year. I think overall, the Indian market, that ApcoBuild is entirely for the Indian market and more for the sort of western and central region. We have seen growth, slight growth, but we don't, as I said, it's still a small part of our business, so we don't really report on it.
Okay. What exactly are the triggers for our nitrile latex segment to grow, which could potentially lead to higher margins overall?
Sorry, didn't understand the question.
what exactly are the triggers for our nitrile latex segment to grow, which could potentially lead to higher margins overall?
Yeah, so in terms of volumes, and we are perfectly on track. Our original thought was that we would reach 100% capacity utilization within 2 years. I would say we are at a run rate now of about 80%, so we are a little bit short on that, but that is also because the margins have been very low. So we are only focusing on customers where we are getting at least some margins. So I think we're just waiting for the whole industry to kind of turn, because the capacity utilization in the industry really became very low with so much capacity added, and then post-COVID demand going down as well. So now the demand is back to kind of pre-COVID levels and a little higher, and all the inventories that were in this sort of the glove inventories have been utilized, that additional gloves produced during those COVID years. But we are seeing a lot of capacity utilization, idle capacity utilization. So when that turns, margins will go up. That's the main trigger.
Okay. And what about freight cost updates?
Sorry to
Are they reduced or?
There are 2 questions.
Let her finish one question.
Okay.
Sorry, go ahead.
Yeah, I was asking about freight cost update. Are they reduced or?
Sorry, were you talking about freight cost, ocean freight?
Yeah.
Oh, ocean freight have been definitely better. They've reduced over time. Some pockets still remain a little higher than what we would like, especially to Middle East and Turkey and so on. Middle East meaning, Egypt. Anywhere we have to pass through the Suez Canal, even Europe, those costs remain high because some ships are going around South Africa now. But overall, I would say freight cost is not so much of an issue now, except for the markets in for carpets mainly, which is Turkey, Egypt, that area, Saudi.
Okay. Thank you, sir.
Okay, thanks.
The next question comes from the line of Himali Gandhi, an individual investor. Please go ahead.
Hello.
Go ahead.
Hi, sir. Can you hear me?
Yes, we can hear you.
Thank you for taking my question. I wanted to ask that currently exports contribute 30% to our revenue. But given the current scenario, how do you see that panning out ahead? And what could be the headwinds and tailwinds we could see?
In exports?
Yeah, in exports.
Okay, so currently we're at about 1/3, 32% is 32% of our total turnover is exports. Honestly, for us it's not so much about exports, domestic. Obviously, over time, since we are very strong in the domestic market, for most of our products that we are in, the real big driver for growth is export. So we do expect it to go above 40% over the next couple of years. There is no major headwind, I would say, because we're focusing more on regional exports, Southeast Asia, Middle East, North Africa, so the MENA. These regions are probably 2/3 of our total exports, and remaining in other parts of the globe. So headwinds there, it's mainly this overall global capacity addition that has happened in nitrile latex and some in our other latexes as well, other synthetic latexes. That's the main headwind. Otherwise, we don't see much of an issue.
Okay. Just add another one question. Can you, on a broader basis, can you give us the industry-wise, revenue segmentation? We cater to 7 industries.
So approximately, the rubber, we are at about 1/3, it's about 30%, 32-33% is the rubber industry. Tires is probably another 10% or so. And then largely we have paper, construction, carpet, textiles, which would be all around 15% each. So 15% paper, 15% construction, 15% carpet and textiles put together. I may be missing one. And nitrile latex, of course, is another 15%. So, may not exactly add up to 15%, but add up to 100%, but gives you a little bit of a flavor.
Okay. So can I take one more question?
Sure, yeah.
Thank you. If the geopolitical issue turns favorable, would we be able to capitalize it in the short term? Like, can we do capex within a few months, or would it take more than a year to do capex, and you would be able to have benefits of capex-led growth? Like, how will it go?
So again, didn't perhaps understand your question fully, but correct me if I'm wrong, but you're asking geopolitical issues. Is there any benefit that we can take out of this? Are you specifically asking about?
If the current scenario somehow turns favorable, will we be able to capitalize it in the short term? And
So in the short term, certainly, because we have, from the latex side, we have capacity on both nitrile latex and our other synthetic latexes. It's a question for next year. So we expect that the capacity will be ready by the time we'll really need it. But in case, as you said, suddenly if there's a certain demand this year and we get some 25-30% growth suddenly, then yes, we will not be able to capitalize into the volumes, but we'll take advantage and try and improve margins in that case. But honestly, given the current geopolitical environment, I don't think that's going to happen. There is not a lot of stuff that's looking great.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question comes from the line of Ankit Kanodia from Zen Nivesh Advisors. Please go ahead.
Yeah, thank you for taking my question, and congratulations on decent set of numbers given the external environment. So most of my questions have already been answered. Just a couple of them. Number one is, so in one of the questions you said that you had a difficult year for Apcotex. Can you just throw some more light as to what happened there?
Difficult year in the sense that we have been used to 18-20% or maybe more growth earlier. This year the growth is in single digits. So I just mean from that point of view, it was not such a great year. But because the previous sort of many years, 6, 7, 8 years, we've had good growth. We've just seen the Indian sort of construction chemical space is crowded. The growth hasn't been there, and I think you can see that in the other sort of allied building material segments as well.
Mm-hmm.
I think that's just to do with English. I think that's not such an issue.
Got it. But I think we started this somewhere in 2017. So even after 8 years, if it forms less than 5% of our, or maybe lower single digit to our revenue, don't you think we are growing this much lesser than what we would have liked?
Yeah, I mean, look, we're obviously we could have done better. We can do better, but as I said, it's more of a downstream play. We have a few of the main raw materials, so we're trying to capture the downstream margin, and we're quite happy with the way things are progressing. Things could have been better, of course, and we would have preferred to be a bigger business than it has. But it's still a profitable business on its own. We run it like a standalone P&L, and it's a good, small, profitable business.
Got it. My second question, sir, is slightly longer term. So if I have to look at how we have grown and how we have basically added more products, added more geographies, and also reduced the customer concentration risk over the years. What I have generally observed is that your business has achieved scale also, and inherently the margins, EBITDA margins, have also increased over the years, even though in between there have been periods when margins have been very high and then they are very low. So is my understanding correct when I see that in the last 2 years when the margins were fixed, we are closer to the bottom yet, and the next 2 years, 2-3 years from here, we should see both from margin and asset turn perspective, the number should go up. I'm not asking for any definite number, but...
Sorry, can you repeat the last part you said, from a margin and what perspective?
Asset turns. Even your asset turns also sometimes become more than 8, sometimes it comes down to 2, 3. So that's a very wide range of asset turns which we see in the business from a short-term perspective.
Obviously, as I said, what happened in 23-24 was unusual, because a lot of assets added to more than 200 crores of assets on literally in one quarter. So therefore the asset turn fell. And then obviously as the capacity is used up, the asset turnover goes up again. So whenever I look at ROCE for the company or asset turn, I think you have to, at least I look at it for any company, not just my company, for any company, you can't look at it as, at least I don't look at it as in one point in time, but an average over a period of 5-7 years. That gives a better flavor. And as far as margin is concerned, again the same issue, right? There's a lot of capacity that was added in that FY2023-24 period for us and for the industry as a whole, which is the main reason why EBITDA margins are lower. But as a business, and we're definitely much stronger now in terms of scale, in terms of, as you said, geography, in terms of industry coverage. So we're not dependent on any one industry, and so therefore the downside is quite well protected. And so, earlier our margins were between, I remember many years, 15-20 years ago, margins would be between 3% and 8%, depending on good years and bad years. Now what we are looking at is 10% and 15% between good years and bad years. So I think over time that will keep improving as we scale up more and more.
Thank you so much, sir. That's really helpful, and all the best.
Thank you. The next question comes from the line of Rudrash Raheja from iThought PMS. Please go ahead.
Yeah, so thank you again.
Yeah, go ahead.
So could you tell us about your debt repayment plan, if you have any?
We don't have, as I mentioned to the previous caller, we had one long-term loan that we had taken for about 125 crores for the projects that we did, and we are paying it back as per the schedule. We expect. Go ahead, Sachin. Sachin will give you a flavor that it takes how long.
So we have already repaid a year of term loan installments, and in the next 3 years we will close the loan. So it's a 4-year period in which the loan will get closed. Total.
I honestly think it's not a big deal. We have 100 crores of cash against our term loan, which is also currently 95 crores or something.
100 crores.
About 100 crores. So against the term loan, we already have that cash, and the rest of the borrowing is just working capital borrowing. And if you see for 1,400 crore company, a working capital borrowing is about 80 crores, which is less than a month of working capital. So we're very in fact, we've got feedback from some of our board members that we're being too conservative and we should have more debt.
Okay. Sir, in terms of the latex product, sometime back when we expanded our capacity, you mentioned that another player in the industry also expanded at the same time. So that's why prices crashed. So specific to that.
I think the margins were affected because, everyone's holding on to market share or trying to improve market share. It happens, And it's just that, also don't forget that post-COVID, that huge jump in 21, which no one was expecting, In fact, if you remember calendar year 20, everyone was so worried about COVID and what would happen to businesses. And suddenly in calendar year 21, what we saw was a huge pull from the market as people were sitting at home and ordering goods. So all manufacturing went up. So in 21 and 22 and parts of 23, we were running at 100% capacity utilization. In those 2-3 years, everyone panics that we didn't have enough capacity. And when I say we, I mean the manufacturing industry as a whole and our industry in latex and these products. And we built more capacity than we perhaps needed to at that time. Thinking, that it will be used up quickly. In our case, but we've been conservative. We have been very good at using it up, and I think we've done a good job overall. So that unusual period has gone away now. Now people are I think companies are going to be a lot more measured about adding capacity.
True, sir. But are margins coming back there? Capacities we have filled, that is true.
They will. They have to. Because to invest further, you need a healthy return on capital, so you need healthy margins, right? Otherwise, no investment will happen.
Got it, sir. Got it.
Okay, good. Thank you. Thank you, Rosa.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for the closing remarks.
Thank you everyone for joining us on the Q4 and financial year 25 conference call. We look forward to seeing you in the new financial year now for the Q1 results in July. Thank you very much for your time.
Thank you, sir. Ladies and gentlemen, on behalf of Apcotex Industries Limited, that concludes this conference. You may now disconnect your lines.